first rates Friday morning, last trading day of the week. What do we have? Vodafone, which was at 14-15 rupees, is off 50%. And that's what happens. Some of these stocks which are large, liquid, dominated by HNI investors, when they swing both ways. Vodafone is at 77.5 now. You got HCL Tech, it's good numbers, but it's not like a blowout start because a lot of IT yesterday acted and reacted and adjusted post the Infosys numbers. Yes Bank, it's always a yes and no, but right now, well, the Yes Bank so-called follow-up offer looks like has not got any exciting response, so to speak. In terms of the value transaction, I'm trying to just sniff across where the value transactions currently are. HCL Tech on expected lines, Reliance 0.5% higher, Infosys good follow-up buying, Britannia ahead of numbers nearing to 4,000, and then you got BPCL 402. Good work, Ajay. 402. The stock is clearly reacting to what ET Now yesterday indicated, where the divestment proceeds are moving. So Aisha, will divestment be the next trigger? I mean, markets, they need something, whether it's storytelling or an assumption or a view or something new or something different to look forward to. Will divestment be that big one? An unexpected divestment, a large stake sale in any of the companies, or a strategic stake sale by the government in, let's say, BPCL or combination of other companies. If we get something on divestment, Aisha, this market will get something really big to look forward to. And today's price action in BPCL is saying that markets are aligning to what we reported yesterday.
Yeah, I also want to see what HCL Technologies is up to. The numbers just came out, and let's see whether IT continues to look as a buzz as was the case in the last two trading sessions. First after Wipro numbers, and then yesterday after Infy's reaction as well. HCL Technologies on your screens. PTC India as well, they're looking to sell stake in PTC India Financial. L&T Technologies, they're going to be acquiring Orchestra Technologies, a very small acquisition actually, $25 million. You've also got Yes Bank. The FPO has got a 47% demand on day 2. Remember, it closes today for subscription, so look out for that one as well. And a couple of other earnings reactions. L&T Finance, we'll be chatting with the management as well shortly. Weak numbers, higher provisioning, liquidity comfortable, but moratorium still very high. Also, L&T Technologies, muted earnings at that, slow recovery seen from the second quarter. And Cyient, on the other hand, it's little bizarre as to how mixed a bag really it is for some of these mid-cap IT players. Cyient, strong numbers, management is seeing a growth from second half onwards. That stock should be the one to look out for today. While L&T Finance is down, Wipro as well has eased off a little bit. HCL Technologies too is seeing a bit of a red tick, and so is Tech Mahindra. Just marginal profit taking. These stocks have run up breathless really all of this month. SAIL is your big winner today, holding up 4.5%. Indiabulls Housing holding up. There's Bosch, there's Tata Steel and NMDC. These are your big winners today. DRL as well, that's another actively traded stock. Nestle has made a very strong start, about 0.8% higher right now. And Oro Pharma as well, which is climbing up and now nudging that 845 odd level. For the Nifty, it's a comfortable start, about 0.5% higher, and the breath has opened positively. But CK, what trend do you see the index taking towards the latter part?
Well, I think both Nifty, Bank Nifty, decent opening, and breadth is good, but most predominantly metals are the shining sector for the day, it appears, with all SAIL, Tisco, Jindal, everything up and about. I think financials seem to be in a mood to contribute because some of the names are up and about. So I think it's going to be a stock-specific day. 10,760 for 760, 770 for the Nifty. I think we are still caught in that range, 10,880 on the top and 10,550 on the lower end. We are still caught in that range from a few days ago. So the index will churn in this area, but I think individual stocks are going to do very well. So I would want to concentrate today on the metals pack, because right off the bat they are the ones doing very well. Tata Steel in particular, I think that's the one flying off the starting block. So any pullback intraday in Tata Steel, I would be a buyer. Jindal Steel, I am always a buyer whenever the market favors the metals pack. I think Britannia is going great guns. within the FMCG pack. So that is something to look at. And Dabur, which I had a buy, I think yesterday morning, I think that's something which might continue further. So FMCG is another pack to look at. BPCL was in the news and continues to be up and about. So maybe 410, 415 should be up on the board very shortly. So Escorts is the other one I would want to buy it at the current levels.
Okay, that's the opening then for you this morning. Let me welcome in Saurabh Mukherjee, who's joining us on the show. Saurabh, good to have you with us. Let's just start off with the kind of momentum we're continuing to see, Saurabh, approaching 11,000, everything looking pretty much on track, and commentary also continuing to be fairly bullish. Global liquidity, there doesn't seem to be any kind of hiccup or pause coming. Do you feel that the path ahead remains pretty smooth, given that currently all the factors seem to be very much in place?
I think in a sort of ironic way, right, these sorts of stop-start lockdowns, which I think I was hearing Nikunj refer to a few minutes ago, these stop-start lockdowns, whether it be in the United States or in India, this actually is ideal from a liquidity perspective, because it almost assures us of a slow recovery, perhaps even an uneven recovery. And obviously that means that the central banks around the world, including our central bank, will have to keep the accelerator fully pushed down on the liquidity tab. So whether it's BOJ, Federal Reserve, or the RBI, I think liquidity will be sloshing around abundantly for the next couple of years. And from a financial markets perspective, whether it's stocks or bonds, that's good news. That's good news. So slow recovery, ideal for stock markets. And I think from that perspective, I think we're in a pretty good spot at the moment. A slow recovery rather than a rapid recovery from COVID means plenty of liquidity, and that puts a base, that puts plenty of support on the stock market. Yeah, this actually is ideal from a liquidity perspective, because it almost assures us of a slow recovery, perhaps even an uneven